TLT has several options still. Now, all options to me suggest we're going back to at least 100. All options to me as what's most likely here. I don't think, I'm going to tell you why I think that's most likely. After you have a decline like this for several years, that's a sizable decline for several years. I don't think a 1 year bounce that doesn't even take you to the 236 retracement is going to cut it as a corrective retrace before the next bigger decline begins. So right now, I'm assuming one of several things. Either that decline was a fourth wave, and we are in a fifth wave down to complete the A wave, fifth wave of a C wave to complete the A wave. And that would take you closer to 70. Or we have bottomed here, and we're getting an A followed by an A, B, C for a B wave, another expanded B wave. And then we're looking for an impulsive structure to point us back to 120. Minimally 120 would still be my main expectation. Minimally, because that's a 3A2 retracement of that entire massive decline. I don't think we're going to start a major decline again in bonds until we get at least a 0.382 retracement back to 120. The only other option, that's why I said minimally, I think we'll get at least back to 100 no matter how this plays out, is let's say we hold right here. Well, that's going to tell me that this is a B wave and a triangle. And then we're going to go back up towards the 100 region for the C wave of a triangle, come back down for the D wave of a triangle, back up for an E wave. This should last a couple more years to complete a B wave triangle. And that will set up your next crash in bonds. I still like us getting back up to here. This wouldn't even take us to the 0.236 retracement of the prior decline. I still like getting back up to at least 120. But let's see how this plays out. Now, mind you, if we do go down to 70, that 120 probably will come closer to 110 as a bare minimum expectation. So bonds are still also giving us some questions as to how, where is the A wave bottom, and when have we already begun, or do we need to restart and begin that next bigger corrective bounce? I still think you're going to get a bigger corrective bounce. On the daily chart, as you can see, the MACD is starting to break down below the any positive divergence here. You still have some nice divergences off of here. Right now, guys, there really isn't a lot on the micro to sink your teeth into from a strong buying, because the strong buying opportunity has invalidated with the move below here. And even though, remember I said even that, really hard to rely on because of diagonals. You know how many times, you see a leading diagonal and they break down more than they hold, at least in my opinion. And this is why I look at them more like a corrective structure and say, I don't trust leading diagonals. And for very good reason. My experience tells me I shouldn't trust leading diagonals. And if you want to know why I stay away from them completely, is because my experience tells me they invalidate as not being a leading diagonal, and more often than not, they are a corrective structure. So I stay away from leading diagonals as a rule, and not just basically from my own experience. Just look quickly, EEM. EEM likely, I think, has topped. Could this still be a fourth wave here with one more higher high? Sure, I'm going to leave that on the chart. I'm going to leave that on the chart for now. Take out this wave too, different story. I'll leave it on the chart for now. But to me, it looks like the EEM has potentially begun a very long-term correction. But like I said, I'm leaving the option open for one more higher high.